Coca-Cola shares hit a record high of $82.05 on the first trading day of the week, marking a significant milestone for the beverage giant. This price surge came on the back of a nearly 1.5% intraday increase, pushing the stock's year-to-date gain to nearly 17%. The rally has also driven Coca-Cola's market capitalization above $352 billion, reinforcing investor confidence in the company's fundamentals. At the heart of this move is Coca-Cola's first-quarter earnings report, which exceeded expectations and sparked a wave of positive analyst reactions. The company reported a 10% increase in organic revenue, surpassing Wall Street forecasts by 300 basis points. That's a substantial outperformance, especially in a market where even modest beats can spark significant price action. Unit sales volumes also rose by 3% compared to the same period last year, signaling strong consumer demand and operational efficiency. These results prompted several major investment firms to raise their target prices for Coca-Cola shares. UBS lifted its price forecast from $90 to $92, citing the impressive first-quarter performance. Bank of America followed suit with a new target of $90, emphasizing both the sales momentum and volume growth. Piper Sandler. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Also increased its estimate to $88, pointing to the brand's continued consumer resonance and strategic positioning. CD's analyst Filippo Falorni adjusted his target from $90 to $91 after the positive earnings surprise, reinforcing the broad-based optimism surrounding the stock. Despite the enthusiasm, some market participants are questioning whether the current share price is fully justified. Research firm Guru Focus estimates Coca-Cola's fair value at $70.35, suggesting the stock is trading at nearly a 15% premium above its intrinsic value. That raises the question of whether the rally is driven by fundamentals or broader market sentiment. However, Coca-Cola's P/E ratio of 25.47 is still below its 5-year average, indicating that current valuations aren't excessively high by historical standards. The company's GF score, a composite of financial metrics, also suggests that while the stock may be overvalued in the short term, it remains within a reasonable range when viewed through a longer-term lens. The combination of strong earnings, rising analyst targets, and a relatively modest valuation has created a compelling case for Coca-Cola's continued strength. Investors are watching closely for signs that this momentum can be sustained through the rest of the year. The next key signal will likely come in the form of Coca-Cola's second-quarter guidance, which will be released in the coming weeks. A repeat of the first-quarter performance could solidify the stock's upward trajectory, while a slowdown could trigger a reassessment of current valuations. For now, the market is clearly betting on Coca-Cola's ability to maintain its sales growth and operational efficiency. The stock's performance also reflects broader investor sentiment toward consumer staples, which have remained resilient even in the face of macroeconomic uncertainty. Coca-Cola's brand strength, global reach, and consistent performance make it a. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Key indicator of how the sector is being valued. As the stock continues to climb, traders and analysts will be monitoring for signs of profit-taking or renewed buying interest. The $82.05 level is a psychological barrier, and a sustained close above that could open the door to further gains. On the flip side, a pullback could test the $78 to $80 range, which has served as a support zone in recent weeks. The coming weeks will be crucial in determining whether this rally is a short-term bounce or the start of a more sustained move higher.